Joining us to discuss the global risks that weigh on markets and the outlook for 2012 is Alex Jarzewski, founder and managing partner at Recovery Partners. And in Vancouver, we have Bob Hoyes, chief investment strategist at Institutional Advisors. Gentlemen, thank you very much for joining me. Alex, let me start with you. 2011, a weird year for investing and for economies and for debt and for Europe and for everything. Give me a summation on 2011 and what you're, maybe briefly, what you're expecting for 2012.
Well, I think 2011, the jury's still out, but I think 2011 is probably going to go down in history as a huge missed opportunity for the Americans to get their house in order and a missed opportunity for the Europeans to get their house in order. And I think in 2012 we're going to start to see some of the fruits of that failure come home to roost, to mix metaphors somewhat. But the problems that we had at the beginning of 2011 haven't been appropriately dealt with. The conditions for emerging from this cycle of sluggish growth and financial risk, those conditions have not been set up for the markets. And I think we're going to see continued volatility and possibly another lurch into some kind of an uncontrolled slide here, unless these situations are dealt with appropriately.
Mm-hmm. Now, Alex, you mentioned next year we could start to see the fruits, if you want to call them, of the inaction of 2011. Yeah. How do you think that's going to manifest itself? What are you actually expecting in terms of
I think we're in sort of a nothing market right now going into year end. Just to pick up on one of Bob's points, I mean, one of the other manifestations in the European market certainly is a growing correlation between stocks across asset classes and also country debt. And I think we're probably going to see that correlation continue. And that's not a good sign, because you know that in a crash, all correlations go to 100%. I think that the European markets are going to continue to act as a bellwether over the next short while for market sentiment generally, because that's where the real pressing problems are. You've got huge upcoming financing requirements for Italy, Greece, Belgium. A lot of the Eurozone countries that are in the crosshairs right now do need to raise a lot of debt. Where that's going to come from and at what price is still a question mark. And you've got the perverse impact of all of this in terms of the US dollar as being viewed as a safe haven asset class. And that may lend support to the fixed income markets in the U.S. and to some extent the share market. But it's not going to be, it's not going to be a bed of roses for anyone.
Alex, what do you think? Is EU going to, or Eurozone going to break up and the euro go by the wayside?
Break up, yeah, it could break up in an uncontrolled way if the situation isn't managed. We've said from the beginning, from 2 years ago, if you had a controlled default situation, you put Greece out of the Eurozone, you write down their debt, you give them an opportunity to crawl back in 5 or 10 years, assuming that they meet certain economic tests, that would have nipped the problem in the bud. We wouldn't have had any talk of Italian contagion or Spanish contagion. It's way too late for that now, and it looks almost inevitable that one of the smaller countries, one of the peripherals, is going to have to bow out of the Eurozone. And that's going to have, I think, a much larger impact than it would have had it been done in a controlled way, in a purposeful way, with the authorities leading the charge a year and a half ago. And it would have come at far less cost. And I think we're staring that right in the face right now in the first quarter of 2012. Greece is already defaulted. We've already had a write-down of Greek debt. Are the Italians going to be able to raise the money? Is this bumbershoot that the Europeans are trying to put together, this bazooka, is it a bumbershoot or a bazooka? They haven't been able to fund the EFSF. They had a bunch of failed auctions. They're trying to put the ESM together now on an accelerated basis, on an expedited basis. They've gone around with a tin cup to imagine who? Russia and China. I mean, it just underscores the desperation that these people must be feeling, and the bankruptcy of the recovery plans, absent clinging, steadfast to the idea that the Eurozone must stick together at all costs.
And Bob, I can't let you go without talking about this note you put out, reaching back into history for some solutions, some dramatic solutions to money changes. You're all the way back to 1125 in Britain with the Normans. Some pretty dramatic action taken against moneyers, as they were called back then.
Yeah, Paul, the term was false moneyers, and even Dante, the humanist writer, had a special place in hell for false moneyers. The public next year will probably discover that central bankers are false moneyers. And there's a very seasonal aspect to it, because in the 12 days of Christmas in 1125, they got fed up with false moneyers and took them each into a room and removed their right hand and the testicles below.
There you go.
It's a very severe remedy, but then also the chronicler writes that, well, these false moneyers deserved it. So I think in next year, the public will gradually discover that central bankers truly are false moneyers.
False money. Now, there's a solution I don't think anybody would recommend right now, Alex. The 10 seconds left.
Well, and just to pick up on the religious overtones here, perhaps it's time for a biblical jubilee and a cancellation of all debts. Maybe this is something we'll see in Holy
That would be a true miracle.
2012. It could be.
Gentlemen, I have to leave it there. Thank you very much for joining me.
Thank you.
That was Alex Jershevsky, founder and managing partner of Recovery Partners, and Bob Hoy, chief investment strategist at Institutional Advisors. If you missed any of today's program, you can always catch us online at bnn.ca.